hey, if you start stacking today, when could you retire?
My own personal framework, I think it's probably around only 0.1% of the population has any fundamental grasp of it, and 100% of people are going to need it. It is increasingly going to be demanded 10 times, 100 times, 200 times more from now. Saylor has said that owning Bitcoin and owning strategy are two different things, because realistically, owning Bitcoin is necessary to, I don't know if we're in a super cycle, but it does feel like the true rapid monetization of Bitcoin is when
Mr. Parker Lewis, thank you so much for joining me here today and being a playable character in a sea of non-playable characters. Thank you, sir.
Great to be here, Brandon. Thanks for inviting me on.
Yes. So for those of you who don't know, Parker is an educator. You've been in the industry, been in Bitcoin for a decade plus, doing incredible work. He's author of Gradually Then Suddenly, an incredible book. And that's kind of the theme of our talk today a little bit. It's can you close your bank account and start stacking Bitcoin basically and retire on it? When can you retire? Is it going to be an orderly thing? Is it going to be gradually and suddenly? Is it, what about the super cycle, the 4-year cycle? Are these things over? Which one's coming? So that's what we're going to dive into today, and want to walk people through this journey from someone who has seen a lot over the years and really one of the best educators in the space. So the first question I have for you, Parker, is it seems weird with price over 100,000, but in saying that, is price suppressed still?
So, the way that I think about that question is, what could possibly be the things that are suppressing price? And then ultimately, where is Bitcoin going and why? And I always try to anchor to the fundamentals, right? To the long-term fundamentals, because then things that could or couldn't be suppressing it in the short term ultimately become overwhelmed by them. And so the most important fundamentals are, in my view, the fact that Bitcoin derives its fundamental value from its fixed supply. It's 21 million fixed supply, that it ultimately represents money that can't be printed. Everybody in the world would benefit and ultimately will need money that can't be printed. And where I would say that we're at today, no more than 1% of the population understands the consequences of those two statements that I just said. Everyone's going to need Bitcoin. And if 1% is conservative, I'd say it's more realistic that only 0.1% of the population has any fundamental grasp of it. And 100% of people are going to need it. And so I might not term it as price suppression, but the Fed increasing interest rates artificially, and then they're artificially going to reduce interest rates by printing money. All of that drives people to Bitcoin in the end. And there may or may not be short-term dollar liquidity needs, but what happens as a certainty is that the Fed has to print money, the European Central Bank has to print money. The reason that they do is because there's an imbalance between the amount of debt that exists in the world and the amount of money that can service them. And so I think that the price being at 100,000 Bitcoin feels boring, but very few people own it. And it is increasingly going to be demanded 10 times, 100 times, 200 times more from now, for all of the same reason that Bitcoin solves the identical problem for every last person on earth.
That brings up a great point. I get a lot of people that will, family, friends. And one of the big things is always, you touch on, people will need it. They're going to have it. I get a lot of like, well, why do I need it? Like, how do you know it's going to be around 10 years from now? You get a lot of that, like, well, that's still a gamble. It's still, how do you see that, I guess? And how do you talk to people when they're, like you said, they're 1% of the population maybe understands a neutral money, why deflation is good, Bitcoin, whatever you kind of want to call it, sound money. How do you approach that when someone's coming to you and then objecting in that way?
I would anchor again back to the fixed supply of 21 million, and that, on anybody's journey to Bitcoin, at least I'd say in this phase of Bitcoin going from nothing to fully monetizing, that in some form or fashion, everybody that is early, of which we certainly are, has to form their own understanding as to how Bitcoin enforces a fixed supply. Now, I don't think that anybody has to go fully down that rabbit hole to understand and appreciate why it's important and the inherent asymmetry to saving a little bit in Bitcoin today, even if the full picture hasn't come into focus. Because realistically, owning Bitcoin, buying a little bit of it, is necessary to experiencing it firsthand, to potentially creating an incentive for yourself to then buying a Bitcoin hardware wallet and sending a Bitcoin transaction, or creating a Bitcoin full node. But my point is that in order for somebody to develop any real conviction around Bitcoin, they can't rely on somebody else's word. If I say Bitcoin has a fixed supply of 21 million, well, if you don't understand how or why that's possible, and if you can't think from first principles without relying on someone else's opinion, it's always going to be a question in your mind. What I do, because I've spent the time to understand how the Bitcoin network actually works, how it's held together, how Bitcoin enforces a fixed supply, I evaluate anything that happens in the world through the lens of, did anything that happened today make it more or less likely that Bitcoin could or could not credibly enforce its fixed supply without the need for trust? If no, then it's just price volatility. If something happened, and I'd give an example, like if it were possible to censor a single Bitcoin transaction to prevent it being included in a valid Bitcoin block when it was otherwise valid based on the consensus rules, that might make me question its future. But absent that, I've gone through all of the rationale. And so, the point is that it's a finite surface area. You're not going to get there if you don't own any Bitcoin. Basically, if you just bought $100 worth of Bitcoin, or if you, depending on how much money you have, $100 might not be a lot to you, but you might buy $1,000 or $5,000. Regardless, it's whether it's material to you. Then from there, you're saving some amount in Bitcoin, and that might represent 0.5% of your savings, or it might represent 1% of your savings. But then it's going to drag you down a rabbit hole of like, okay, like if I wanted to own more than something that was a very small percentage, I'd need to form my own understanding from the bottom up, from the ground up, as to whether or not this core underlying assumption can hold, not relying on anybody else's opinion. So that's what I recommend to people. It's like, you don't have to get all the way down there, and almost definitionally you can't, because you need to own some amount of Bitcoin to create that incentive. But in order to develop conviction around it, there's no way around going through the process of figuring out how the Bitcoin network actually works, what prevents it from being undermined, and doing that in a way that you actually have some real visibility into the inner workings of the network, not relying on someone, especially not my opinion about it. And that once you do that, then you can filter all the information, not because you read a book, but because you kind of have some vision of how the topology of the network works, what the incentives of the network are, why Bitcoin miners couldn't undermine it, or why a large government actor couldn't undermine it. And as you do that, then you start to answer those own questions for yourself. You start to reason through various different scenarios, not based on anybody's opinion, but based on your own logic. And so it's basically saying no one at the start of their Bitcoin journey could credibly answer that question of like how or whether or not it is credible. They have to start at that point of, assume it to be true. If it were true, do all of the other follow-on assumptions hold? Like, if Bitcoin did credibly enforce its fixed supply, would everyone demand it as money? If you can understand the why the fixed supply would be relevant, it's not to say, trust me, don't verify. It's that you have to understand why it's relevant to then, as you go down the rabbit hole, frame everything else. Okay, like if I didn't understand why it would be relevant, I wouldn't endeavor to know more. But if I understand the why of the equation, now I want to go down and see, like, is it really true? Because seeking out that truth, or that fundamental in terms of the how, becomes critical to weeding out the doubt, I'd say.
So speaking of the Fed, a couple minutes ago, we touched on that. What want to transition a little bit to, and we're going to come back to what we were just touching on in a little bit. I want to transition to the debt and what is happening there. I mean, we just mentioned, obviously there's been some tightening going on. It's really a couple of years. I mean, it's frankly, it's way longer than I thought they were going to be able to keep this thing afloat by, raising rates and tightening for all intents and purposes. How much longer can we be refinancing on these higher rates, refinancing this growing debt, this doom loop we're in? I mean, when do this currency spigots come back on? Like how is this going to play out? It just feels like at some point, I'm stunned that things haven't broken yet to a large extent. I mean, how do you see this playing out going forward?
The way that I would frame this question would be to first help people understand the broadest dynamics that I think informs an answer here. And it is that currently in the US, there is approximately 102 trillion of dollar denominated debt. And there are only approximately $7 trillion in terms of base money. And those dollars are what are necessary to repay debt. And so I'm someone myself who agrees, like, I didn't think that they could have gone this long with rates this high. But what I think that it signals is, in the last money printing epoch, the Fed increased the money supply from about $4 trillion to $9 trillion. And they've since taken about 2 trillion of those base dollars out to get to the current 7 trillion. What I think that it signals that the system hasn't hit a breaking point is that when they inserted that $5 trillion between 2020 and 2022, they were really shooting in the dark. They knew they had a massive problem, and they printed a shit ton of money and likely oversaturated the market. And I think what's most important is that it's impossible to predict when and what or where the financial system breaks. But if you think about the equation of 102 trillion in debt to 7 trillion, that what the Fed's functionally been doing is taking dollars out and out and out and draining the system of liquidity. And at some point, that system breaks. And the exact same thing happened in 2019. If we go further back in time, the Fed inserted $3.6 trillion in the post-financial 2009 financial crisis or 2008 financial crisis. And then from 2017 to 2019, they were slowly taking dollars out. And then in September of 2019, the repo market broke. And if you looked at the same identical equation and accepted that what the Fed was doing was functionally re-leveraging the system, the amount of debt is not coming out of the system as they take the dollars away to repay those debts, that you could have tried to predict where it was going to break or when. But if you knew just based on the arithmetic that it was going to, that it wouldn't have changed how you acted realistically. And so if you, like, in the sense that, hey, if they keep doing this, which they're signaling they are, that eventually the amount of debt stacked against too few dollars is going to cause the music to stop, because there just aren't enough dollars to pay the then current debts, and everyone basically pulls back from the table at the same time. That's identical to what's happening now. And so I focus less on, where or what's going to break, other than the equation's the same. There's too much debt, too few dollars. You don't know exactly what or where it's going to break, but directionally, by subtracting the liquidity from the system, they are re-leveraging it. And we're already far more than a few dollars short. And that when some part of that credit market breaks, they're going to have to come in to pump more dollars in to satisfy all the debts. Because if you just take that ratio of 102 to 7, the system's 15 times plus, every dollar that exists has been lent out 5 times or 15 times over. And so I, as an exercise, it's important to be conscious of that, because there can be a dollar liquidity crisis, but it's the most important two variables to understand, basically playing through all weathers. That it's the fundamental root cause of why they have to print money. The money printing that they do print is intended to prevent the credit system from collapsing. But if it doesn't just work that way, by putting more dollars in the system, it's actually designed to create a scenario that allows the credit system not just to collapse, but to expand. And to help people understand that, at the 2008 financial crisis, prior to that, there was 52 trillion in debt. Now there's 102 trillion. So the putting dollars in, if they put in 3.6 trillion from 2009 to 2014, and then they put 5 trillion in from 2020 to 2022, that created 50 trillion in aggregate debt. That it only, quote, works if they don't just stave off the collapse, but then induce that credit system to expand marginally.
So once the Fed, once they pivot, or a combination of all these factors, who benefits the most? Who are going to be the ones that are the ones that are going to be the ones benefit? I mean, obviously the cancel-on effect, comes into my mind, obviously, right? But I think the average person might not know what the cancel-on effect is. So I'd love for you to unpack that a little bit of once this thing turns the other direction, who starts benefiting?
I don't really like to frame it that way. And I'll explain why. I think in the short term, the people that are harmed the least, or the people that benefit the most, are, in my mind, the people that are most knowledgeable about the fact that it's going to happen. And combination of that, as well as the people that already have assets that can offset the printing of money, that are going to be valuable regardless of how much money is printed. And those generally aren't people that have very little savings or are just entering the economic system. They can insulate themselves the best. And I do, for fundamental reasons, if you think about somebody that only has $500 of savings, they don't have stocks, bonds, they don't have financial assets, they don't have Bitcoin, they don't have real estate. When the Fed prints money, it debases 100% of the dollars that they have. And that's why printing money is really a regressive tax. Also, if the Fed is targeting asset prices, to say to increase the price of real estate or to prevent a real estate collapse, it's functionally making those assets artificially more expensive. So if you're just entering the economic system, it becomes harder to save to be able to say buy a house, which is functionally what happens. So, for fundamental reasons, and this can be observed, the printing of money has exacerbated wealth gaps. It disadvantages people that have very little savings. I don't want to say advantages people who have a lot of savings, but it does benefit them in the short term. I'm careful about how I frame that, because I don't think it's really I don't think it's true or to anybody's benefit to say the Fed does this to disadvantage the poor and advantage the uber wealthy, even if that might be the short-term effect. The long-term effect, the more important thing, is that it causes the money to break down. And that harms everybody, rich and poor alike. You might feel better in the short term if you have a stock portfolio that's inflating as the money's inflating, but you don't really consume your stock portfolio. And that when currencies hyperinflate and when money fails, that's when wealth is destroyed. That's when the standard of living of everybody goes down, regardless of how, rich or poor you are. And so this isn't kind of a class question. It's really a question of, hey, money serves a purpose in an economic system to coordinate trade. As they print money, it functionally distorts the economic system. It allows imbalances to be sustained and to grow. it ultimately ends in currency failing. When a currency fails, it's harder to coordinate trade, and that trade is functionally the things that you consume every day that you either need to have to survive or that you want to have to benefit your life. And so I think everybody has the incentive to get off that broken system to go to a more sound system like Bitcoin, to be able to coordinate trade in a more efficient way, in a more stable way over time.
Do you think that this is going to be orderly in the sense of, like, Bitcoin obviously being the freest market in the world, and it's, over time, like you look at the log chart, obviously, and it's just, stair stepping its way up. Do you think this is going to be, again, your book, gradually then suddenly? Do you think it's going to be a bang eventually, or do you think it's just going to be, like you said, like orderly? It's just like, hey, it's just doing its thing, and then it flips. Like, how does this plane get landed? You think of Jeff Booth all the time. It's always like, you can't have the inflation in a deflationary world. Like, these systems don't, we have all this technology, all this growth, and all these things going on, but yet we're trying to like fit all that growth and all this technological advancement into an inflationary system, and those systems are just, they're incompatible. There's no way that they are compatible in any way, shape, or form. So, like, what does this look like to you? Like, when we go back to, it's made me think of, like, you and I, we both didn't think this would last this long. I mean, shoot, even 15 years ago, thought that might be the end of the system. I know Larry Lepard, there's so many people that thought that was it. They keep kicking the can down the road somehow. Are we 5-10 years from now? Is it 100 trillion in debt in the US? Is it 200 trillion at some point? Like, where do you see this kind of playing out?
So that's where I think that it's, the saying, markets can remain irrational for longer than you can say solvent. Trying to predict timing versus knowing where the trajectory is going and why. The timing's the most difficult thing to predict, and that you have to plan your life to survive all weathers, right? And that I don't think that it's possible to go from a debt-ridden world of excess, where in aggregate the system is spending far more than it's producing. I don't think that you can transition from that world to a more stable, sound form of money without increased economic instability between then and now. I think it's important to reinforce that the reason why the Fed is going to have to print trillions more in money, why the European Central Bank is going to have to print trillions more euros, why the Japanese Central Bank is going to have to print trillions more yen, has nothing to do with Bitcoin. It has to do with the imbalances that exist in each one of those economic systems, and specifically the imbalances between the debt that exists and the supply of the currency. So it has nothing to do with Bitcoin. But the solution to that problem, if the central bank in the local economy in which you are, say for me, the Fed here in the United States, is going to print money and I'm saving in dollars, I have an incentive to save in a form of money that they can't print, to save in Bitcoin. Now, the parallel or the way that I would think about this, if it's true that you can't go from a system that is unsustainable and that has suppressed volatility for decades to a more stable economic underpinning without increased volatility or increased economic stability, I think the right way to assess it is, what if Bitcoin wasn't there as a lifeboat or a viable off-ramp? A parallel that I would draw would be to when the Venezuelan bolivar hyperinflated. When the Venezuelan bolivar hyperinflated, there were other currency systems working around it that lessened the impact of that. Now, the impact of that, like, wealth was destroyed when the Venezuelan bolivar collapsed. It was a lot more difficult to get basic necessities to places like the grocery store. It was difficult to produce power, to get power to grocery stores or hospitals to be able to deliver and fulfill very basic necessities to their local economy. But the US dollar was working, the euro was working, the yen and the yuan were working, and people could still coordinate economic activity because there were other currencies to fall back to. That's the way that I view these more developed currencies being at risk. And if they continue to print them, they will have the same fate. And it's that.
Hold on 1 second. If you are holding your Bitcoin on an exchange still or sharing your keys and your KYC information with a third party, everything you're learning about right now is completely moot. This is your wake-up call. You are only self-sovereign if you alone hold the keys to your wealth. Bitcoin is the first and only asset in human history where humans can actually custody entirely their asset. Custody sounds daunting at first, and believe me, it was for me 10 years ago, and I missed a year or two of massive gains, and I don't want that to be you. It's exactly why you need to talk to my friends, Tony Asbach and the Bitcoin Way. His team will train you to do it right the first time. We just interviewed Tony the other day, has 50,000 views, an unbelievable response. People love him and his story and what he has to share in his mission. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. So quit sitting on your hands like I did a decade ago and get started today. Again, that's thebitcoinway.com/Brandon. Now back to the show.
While there might be increased volatility and economic instability between now and a future that is more economically stable on a Bitcoin standard, it is because Bitcoin is there that the amount of pain that will have to be felt will have been lessened, and that in the absence of Bitcoin, these currencies will similarly, experience the same fate as something like the Venezuelan bolivar or the Turkish lira or the Argentine peso. But if we didn't have Bitcoin, then each one of those local economies, whether it's the US, Venezuela, Argentina, Turkey, Japan, anyone in the Eurozone, if Bitcoin wasn't there, the amount of pain that we'd all have to feel and tolerate would be far greater. And because Bitcoin exists, that as those currencies are continuing to inflate in a steady basis, or when they inevitably start to dislocate and hyperinflate because they've been printed at the trillions at no cost, that everyone will be better off because Bitcoin exists, but the instability won't be because Bitcoin's there. It will actually be lessened because people can turn to it as an alternative.
What do you think because this trade right now, the Hugo Stennis trade, it's, I forget, there's a couple names for it, right? But it's borrowing in the fiat currency, and what Saylor's doing, borrowing in fiat, and then you're then buying with it, strong assets, in this case, Bitcoin, obviously. Do you think that we have fiat far into the future? Like, do you think we ever get to a true hyper Bitcoinized standard where it's just Bitcoin? It feels like the people at the top will say, I don't know the best way to say that, they really like that trade. And I know that's a lot of I see this a lot too from like the altcoin crowd, whether it's XRP or whatever it is. And that's the argument. A lot of it is, well, yeah, Bitcoin is a store of value. It'll never be a medium of exchange because there's other options, and whether it's fiat or it's other altcoins, and people are not going to want to spend their Bitcoin ever. So I'd love for you to unpack your thoughts on this, because it kind of touches multiple things, whether it's fiat or it's altcoins, and hey, we're going to keep using these, and government's always going to issue them. They're never going to relinquish that. Does education get to a point where those all go away at some point in your mind, or like how do you see this unfolding in the coming decades?
Well, I think that anybody can, or where we're at today, where very few people understand Bitcoin, that fiat currencies are going to coexist with Bitcoin so long as a fraction of the global population sees the field of what's happening, where so long as there's demand for fiat currencies, then there will be opportunities to borrow fiat currencies from people that want to get paid back in fiat currencies to then buy a harder currency like Bitcoin. But if the same reason that I would want to save in Bitcoin, for the reason that it can't be printed, as more people figure that out, and say as 50% of the world figures out that fact, that as all of those 50% decide that they also want to save in Bitcoin and value fiat currency less, then the equation begins to shift as the number of people that sees the field grows. And that if for the same reason that I would want to save in Bitcoin is the identical reason why all 8 billion people in the world would want to save in Bitcoin, that as we begin to reach more of a stasis and more people have Bitcoin, more people have figured out why it stores value. Once you understand, that's what I'm working on now is Bitcoin payments. Once you understand that Bitcoin will store value, it becomes very logical to ask people to just pay you directly in that currency. And so if you envision a world where nearly 100% of the people, and I'll get to more of a realistic timeline, but say once 100% of the people in the world understand, hey, there's this form of money that can't be printed, and you don't have to trust that don't trust me, but the credible enforcement of Bitcoin's fixed supply is only reliable and is only credible because no one has to be trusted. Everyone has an incentive to prevent everybody else from printing money. That it becomes logical that everyone is just trading in direct goods and services for this form of money that can't be printed, when your alternative is other forms of money that both can and are printed in the quantities of trillions at no cost, and that inherently are trust-based, right? And that they're trust-based in a central authority. So that is the ultimate end game. And then there's another side of it, that Bitcoin is capable of being transferred with ease over a communication channel. That it's possible, even if it's not widely adopted today. We just saw last week's Steak and Shake, enable Bitcoin payments at all of their stores, that you can walk up to a register, you can take out your phone, and you can pay Bitcoin. That is possible. So because the incentive is that it's a form of money that can't be printed, and because it's technologically capable of being transferred easily from individual to individual or from individual to business, that those are the two things that will drive bad money out. Good money will drive bad money out of circulation. Now, I don't realistically think that 100% of the population will be able to figure this out before there's a rush into Bitcoin. I think that it's realistically something more like 1 in 20, that once 1 in 20 people, and I think that way, and I'll articulate it, but my rough estimate would be no more than 1% of the population understands Bitcoin today. I think that it's more realistic, based on a number of different metrics, that it's not more than 0.1%. Right now at about 2 trillion. In terms of global financial assets, it's about 400 trillion. So Bitcoin has a share of roughly 0.5%, but assume 20% of that, entire base doesn't really know what's going on. And I say that in the perspective of material exposure to Bitcoin and having figured out the real signal apart from crypto, apart from blockchain, apart from stablecoins. But pick your number between 0.5% and 0.1%. And that 0.5% is really the maximum if you just take the simple 2 trillion over 400 trillion of financial assets. And then say, well, if Bitcoin adoption were to increase by 10 times from 0.5%, that would be 5%. And at that point, if Bitcoin increased by 10 times, it would be about 20 trillion. It would start to rival the dollar as the largest currency system in the world. Such that if you were to start to think about it within those bands of if it were to increase by 10 times or 20 times, and thinking from the perspective of if demand were to increase, if the number of people who figured out the real signal in Bitcoin, that it was a form of money that can't be printed and that its fixed supply of 21 million is credible. Well, once it starts to become near the largest currency system in the world, it will have overcome all the other currency systems in the world, and it will become more obvious to more people that the consensus of the future of money is Bitcoin, and that there will be a rush into Bitcoin and out of other currencies once we start to near that point. And so, my own personal framework, I think it's somewhere in the next decade, like in terms of probably around 10 years of two more Bitcoin halvings, information continuing to flow through society, people endeavoring to understand Bitcoin, endeavoring to ask that question, how does Bitcoin enforce its fixed supply of 21 million? why is it relevant? And during that period, trillions more in fiat currency is going to be printed because of the imbalances between debt and the amount of money that exists. And so realistically, my personal view is in and around 10 years, but it doesn't really matter whether it's 5 years, 7 years, 10 years, or 20 years if the fundamental direction is true, if the underlying assumptions are true, if Bitcoin does have a credibly enforced fixed supply, if it is possible to go buy goods and services for it technically, and if central banks are going to have to print more money, and if Bitcoin represents the only trustless form of money and all other currencies are inherently trusted, that the timeline upon which everybody else figures it out, if you figured it out, becomes less relevant because you know that trajectory. And again, it being important not to take somebody else's opinion for it, but to endeavor to understand it from the fundamental principles and to test the logic of those yourselves, so that you're not relying on other people's opinions, but you're evaluating the underlying economic incentives of what's actually dictating them.
You hit on multiple things I wanted to touch on and maybe think of a few more. So you mentioned 400 trillion. Were you saying that that's the monetary premium? I know, like, whether there's Jack Muller's, say 400, 450 trillion, it's one half of every transaction is the money. And I know there's some people are on the camp of the money is like Bitcoin is going to account for all of it. So whether it's 900 trillion or 1 quadrillion right now, wherever we're at in the total global assets, are you, which camp are you in? I guess is money one half of all the assets, or one side of every transaction, or is it, hey, Bitcoin is going to account for all of these assets at some point because it is money, it's the accounting system?
I don't think that it's static, and so I also don't, financial assets aren't the only assets that exist in the world. It's a share of them, and that the amount of dollars or a dollar denominated quote of that money is ultimately missing what the fundamental value of money is, which is to coordinate trade, to deliver things to your local economy or to the real economy that you can consume to improve quality of life. Things like power, things like clean water, things like healthcare, leisure, going on vacation, air travel, that as people are opting into a sound money, that is actually the underlying fundamental is improving the ability to produce things of tangible real value. And so like money is one half of every value transfer. The amount of dollars that exist is variable. So I'm more pointing to a number to say, hey, what's a way to think about the amount of people that have figured out Bitcoin? Another way to do that is to take a poll of your local friend group or your company. I would say if there's a company of, if there's a Fortune 500 company that has 100,000 people, have 1,000 of the people in that company figured it out, because that's the other way to benchmark. And it's more to say that rather than to get to a precise figure of how much of the world has adopted Bitcoin, to accept that it's a very small percentage that have really figured out the true signal, and knowing that whatever that percentage is, if you then question it against the assumption, hey, if it were true that Bitcoin is money that can't be printed, and if it is permissionless, does everybody in the world benefit from being able to opt into a form of money that can't be printed? Because that's the ultimate. How many people have figured it out? How many people have adopted versus how many people will in the future?
So we touched on the Steak and Shake a second ago, and that's something I wanted to ask you about, and the things you're working on. Is that, because there's always been this debate for years now? Is it the consumer side that has to ask for it? Is it the businesses that need to be making it an option? Obviously, we're starting to hit not a critical mass, but it's becoming more mainstream, we'll call it, I guess. Obviously, social media things are getting out there, people are seeing it. What do you think in terms of a bill or how the government views it? Like, do you think that the capital gains are something that need to be removed? Is it de minimis? Is it need to be legal tender? Like, what are we looking at in terms of, hey, things would really open up, and Bitcoiners this would be used a lot more if this was changed. If X was done, then I think we'd see more steak and shakes. This would be happening further. What are your thoughts on that?
In terms of the payment side specifically, like using Bitcoin as a day-to-day transactional currency, I think that it's going to be driven by people who already have come to the understanding of why Bitcoin's money, the importance of its fixed supply, and why Bitcoin will store value over time. And so in the context of Steak and Shake, I don't know the ultimate answer, but that company, some group of people at the corporate level have figured out that it's in their incentive to ask for it as payment. And that I think for the very early adopters of Bitcoin, of which anybody who's adopting Bitcoin now that's found the true signal, they're in that cohort of people that are very early adopters still to this day. And that in order to be one of those early adopters, I think that it's practically speaking not possible to do without going down the Bitcoin rabbit hole, to not listening to a podcast like this, to not reading a book, to not having a discussion with somebody at length to help gain that primary knowledge. And practically speaking, nearly 100% of people that have adopted Bitcoin to this point have in some form or fashion gone through that journey. But I think the vast majority of everyone in the world will come to understand Bitcoin because they're seeing it used as money. And that one of the biggest hangups of Bitcoin is, well, I understand it has this fixed supply, but I can't buy anything with it. And that in the logical order of operations, it's first understand why it stores value, then demand it as payment. And that as that process happens very organically, then people see that Steak and Shake is accepting it, or some local grocer is accepting it, or something that you need in the world, that business owner has decided to accept it as payment. And there will be an unlock for more people than have gone before you to this day of adopting Bitcoin that will adopt it in the future, because that actually use of it is an education in itself. That it's not something that's happening in theory. It's, oh, there's a real business offering a real good or service, and they're taking it as money. I've never shown up to the grocery store, shown up to any restaurant, and seen them accept Apple stock as a form of money or U.S. Treasury as a form of money. And there's a fundamental reason why, because those assets have inherent counterparty risk. Bitcoin is something that you can transfer to another person without a liability attached to it. It can actually be settled at point of sale. And that is not possible for anything functionally not money, certainly not a financial asset like a security or a stock or a bond. And so I do think that in the grand scheme of education of Bitcoin, that as more people accept it as a form of payment, being driven specifically by the merchant side, that more people will come to understand Bitcoin as money, as a medium, and begin to save in it increasingly as more instances like Steak and Shake and others occur as we go forward.
Yeah, it's funny because it blows a lot of the objections again you hear from whatever anti-Bitcoin crowd of, well, can I use it at the grocery store? It's like, again, it's something you hear all the time. It's just like, boy, oh boy, living in a glass house, you got to be careful what you say. I love that you touched on earlier. Oh, go ahead.
Yeah, and one other thing is that you've never shown up to a restaurant and them accept gold as money, right? And there's a practical constraint that exists there. And so, my view of it, because you also asked about, capital gains taxes, if they remove it, because there's tax frictions. Like, realistically, the thing that in my mind that's preventing broader adoption of Bitcoin as payment is more people understanding the basis of Bitcoin storing value. That if say the United States remove capital gains taxes from Bitcoin, certainly that would be good for Bitcoin. And I think on the margin, more people would look to adopt Bitcoin as payment, but it's not anywhere close to the primary impediment to more businesses accepting it as payment. That if 1% of the population understands Bitcoin, there's not a significant density of consumers and business owners overlapping, consumers that have Bitcoin that might have a willingness to spend it and business owners demanding it. As both of those numbers increase, the population density in any local economy grows, and there becomes more opportunity for a business owner to say, I'm willing to accept it, and a consumer out there willing to pay. And both of those are positively correlated. The more people in aggregate that understand it, some subset of those people are going to be business owners. They're going to demand it as payment because it's a better form of money. It's the most efficient way to actually acquire Bitcoin. It's the cheapest way to actually acquire Bitcoin rather than receiving fiat, paying the fiat processing fees, then converting it. So I think the government ultimately will be dragged along. They will see it being used as money, and they will adapt to tailor policy to the inherent nature of what Bitcoin is as an underlying medium.
Do you think that, and you touched on this earlier too, and I couldn't agree more with like where we're at with adoption. And I think about this all the time. I've talked about this with numerous people on the pod. Is I can't get the Revolutionary War out of my head, in the sense of most people, there's only a couple of percent of people that really were like, hey, I'm grabbing my musket, I'm out of here. Like I'm going after these guys, and we're not taking this anymore. Most people are like, what are you doing? They're indifferent, they're apathetic. They're like, what are you talking about? Like, they're, heck, even most of them are like tattling on the Patriots. They're like, hey, they're in there. Like, people just don't even realize that 97% of the country got the Bill of Rights and the Constitution and didn't do anything. Eventually it grew over time, and more people were accepting of what the Patriots are doing, and the founding fathers, I guess, maybe an easier term for people to understand. But that to me, it feels like where we're at, kind of where it's like a couple percent of people are going to be educated enough to what you're saying, and then they're going to pull everyone else across the finish line, and then it's going to be like, oh wow, everyone gets the benefits of Bitcoin. I guess my question to you is it what's going to educate people? Is it just people like us doing more of these things over time? Is it just the younger generations coming up and the older generations, sunsetting? Is it FOMO? Is it fear? Is it, Canadian trucker incidences? Like, is it just a combination of all those things? Like, I guess what progresses that along in your mind?
I'd say it's the acquisition of some amount of primary knowledge paired with all the things that you just mentioned. That, as an example, people say that, I would say incorrectly say, or will parrot the line that Bitcoin's a hedge to inflation. But if somebody has no basis of any understanding of Bitcoin, and food at the grocery store is getting more expensive, if the dollar price of goods is rising, but they don't have any way to connect that to Bitcoin, then they won't. But if they've heard on a podcast that Bitcoin has this fixed supply and it's designed to be a form of money that can't be printed, and that there's a reason why central banks all over the world are printing money, that then when they go to the grocery store and they see the price of the basic goods and services that they've come to rely on are getting more expensive, then they're able to put those two things together. So I think that at the start, where we're currently at, it's primary education paired with world events. Part of those world events are more businesses accepting as payment. It's something that's happening, and then making someone question, well, why would this person accept Bitcoin? Why are they choosing Bitcoin if there's 50,000 cryptocurrencies? That there's something different. And then there's a economic reality that there's benefit to be had from trade and specialization, that everybody has an incentive to trade with other people in their local economy, and that sound money is what enables trade at a foundational level. And so everybody has an incentive for their own consumption purposes to deliver value to somebody else, but then they need to store that value in some medium to be able to exchange it in the future. And so as a consensus of what money is and what money best stores as value becomes more obvious to more people, the way that I think about it is not that the others get dragged along, but that the others see that there's a form of money in the market that's working, that's storing its value, that's storing purchasing power. And as a critical mass is reached, which isn't 50% of the economy, but is more likely something like 1 in 20 or 1 in 10, that it actually becomes easier for the others to adopt because the consensus of money is more apparent and more obvious. And that the people that have, if money is there to store value to then consummate or affect trade in the future, that if the people that have access to the greatest amount of knowledge and the most wealth to store are the ones that are figuring it out, that 5% of the population might be 50% of the wealth, right? Or 50% of the value to store. And so ultimately, consensus of money is necessary to affecting trade. I must have the form of money that a business is willing to accept and vice versa. And so I think just as those numbers in absolute and relative terms grow, the other portion, again, aren't dragged along, but they then, become more easily capable of adopting because more people now accept it, or there's more infrastructure to be able to save it securely, that it's all positively correlated.
So speaking of this adoption, I want to transition a little bit to businesses, business adoption. And so we're talking about some of this consumer side, a little bit on the merchant side business, but I would love to unpack some of your thoughts on Saylor and what he's doing with strategy. And maybe my biggest question is, do you think what they're doing there and using the existing financial legacy system to and all the tools that the system already had in a way to capitalize with Bitcoin, do all kinds of things that really people haven't seen, for lack of a better phrase. Do you think strategy will outperform just Bitcoin in the coming years, next 5 years, 10 years, 15 years? Like, how do you see what he's doing because obviously that's a lot of the rage the last 6 months, right? You got a lot of people kind of, it feels like maybe sucking in some of the crypto crowd even, which is amazing for Bitcoin and sound money. People getting sucked in saying, hey, look at this leverage play I can make, and using Bitcoin as the vehicle to do it for all intents and purposes. So how do you see this playing out in the coming years?
Well, I want to start, I believe Saylor has said at some points along the way that that owning Bitcoin and owning strategy are two different things. That you can own Bitcoin in a way that eliminates counterparty risk, and that when you're buying strategy stock, you're inheriting the counterparty risk that comes with it, and that the reason to invest in strategy would be to effectively put Bitcoin at risk with the goal of acquiring more Bitcoin, which, if you are investing any money, should be the goal. Yeah. If you have come to understand that Bitcoin is the benchmark, that it's the form of money that will best preserve purchasing power for the reason of its 21 million fixed supply. So in my view, owning strategy is not a replacement for owning Bitcoin, and anybody that's buying strategy should also, if I'm giving financial advice, should also own Bitcoin, and be understanding and intentional about the fact that they're putting Bitcoin at risk by owning it. I personally don't own any strategy stock. I just save Bitcoin. I think it's the slow and steady wins the race. But because there is an opportunity to arbitrage fiat capital markets, it is possible for a period of time for strategy to outperform Bitcoin. But you need to understand the risks associated with it. And I also don't think that opportunity continues to exist long into the future as more people figure out the benefits of holding Bitcoin directly. So in the short term, I do think that there's an opportunity, but it also doesn't mean that anybody copying strategy or Michael Saylor will be able to do the same. That being able to arbitrage fiat capital markets like convertible debt, and be able to do it in a way to mitigate the risk of those arbitrage opportunities. Not every financial engineer is equal. And so strategy, Michael Saylor have historically proven to be highly effective at it. It's the same idea of if there's a high frequency algorithmic trader, they might be able to outperform the S&P. And if somebody just showed up new tomorrow and tried to do the same and didn't have all the technology or wherewithal, wouldn't be able to affect the same ends. And so I think that the basis of anybody thinking about it needs to, own Bitcoin first, understand the case for owning Bitcoin, and then understand the strategy involved themselves. But certainly viewing any Bitcoin that they were putting at risk in owning a financial asset, it's truly capital at risk. It's capital at risk with the idea of ultimately earning more Bitcoin, in their case, per share. And to only do it with an eyes wide open, understanding that with any investment comes a risk of loss. The way I view Bitcoin is it's the least uncertain. It might be volatile, but it's the least uncertain asset for the reason that its fixed supply is credible. And for me, day to day, I focus on building a company and delivering a service, and I save whatever money I can in Bitcoin, and I put what I put at risk in, the endeavor that I'm building. But it's just to know the risk and understand the risk reward, and to weight it appropriately. But I think in all scenarios, you need to own Bitcoin and then make investment decisions, whether it's strategy or building your own business or investing in any endeavor, with the idea that it only becomes, quote, worth it if it's able to produce more Bitcoin than is put in, or that you otherwise could have saved in Bitcoin.
Mm-hmm.
And I think he would say the same.
Absolutely, yeah. I look at it. It's that often talked about in Bitcoin circles, at least, the CAGR and compound annual growth rate of, whatever, we'll call it 60%. And can you get over that hurdle rate? And for me, it was the last 10 years I stopped a few years ago, I guess, but when I had my real estate, team, it took the amount of man hours and capital it took to find good investment properties, and then, to fix them up. I mean, there's a few things where, like, leverage buyouts, which is what, maybe, the Burr strategy in real estate would be, where you're raising money, you're finding homes that need to be fixed up, you're fixing them up, refinancing them, putting tenants in, getting the cash flow from them. I mean, just the time and capital it takes to do that. Like, how many people can go do a leverage buyout of a business or go do all that? I mean, I had multiple people. It was thousands and thousands of dollars a month just to do that. And then you're looking at Bitcoin, you're like, well, wait, I can just save in Bitcoin and it's 60%. I mean, theoretically, you can get an infinite return if you're using other people's money with these leverage buyouts, or, doing this with real estate. But it's such a select, small few people with experience, knowledge, got to raise the capital. You got to do all these things. And then even when you do it, you're then at the mercy of the municipality. I mean, like, where are you? Like, government's collapsing. They need more money. The tenants that are in the property. So, like, you're on the hook always. You're paying property taxes. So you're just like, wait, at some point in 5 years ago, I'm like, what am I doing? Like, this doesn't make any sense anymore. So
and like the way I think about, I don't know what the current premium is for strategy, but if it's 3-1, and you were going to invest $100, he needs to be able, $100 worth of Bitcoin, that he would need to, functionally triple the amount of Bitcoin that he's holding, that you could otherwise purchase and just hold directly. Mm-hmm. And I think, again, over time, it becomes harder and harder to do that as more people value Bitcoin. But I certainly, understand and appreciate how, and I would say, so long as there's an opportunity to arbitrage fiat capital markets, it will be possible to do that. But for anybody individually allocating, it's, should I be happy just owning some Bitcoin? Mm-hmm. And then going into the world to try to generate cash flow to deliver value to others, to then save more in the form of money that can't be printed. That's the real signal.
When do you think, because it seems like, and much more of this than I do, the Silicon Valley, Wall Street, it feels like Bitcoin is still the redheaded stepchild, where it's just like, yeah, like, you guys are doing amazing, but, like, at what point does Wall Street kind of be like, after you're seeing, what Strategy's doing, and then all these other companies now jumping on board, and like, hey, now Steak and Shake's doing this. All these companies are starting to do this. Is there some tipping points when gradually then suddenly in your eyes, or is it just, again, like this going back to like this just education where it's like just chipping away one day at a time, where eventually we kind of wake up 5 years from now, 10 years from now, it's like, oh, like, wow, everyone's doing this Bitcoin thing, huh? Like, it just feels like it was still like people are just blind to it to a degree, whether it's in Silicon Valley, the VC side, or if it's, over in on the other end of the country in Wall Street.
Yeah, my view of it is that certainly today it's just chipping away. It's one mind at a time. People having conversations amongst their family, amongst their friends, sharing podcasts, sharing books, attending Bitcoin events to learn and garner knowledge. And so long, in terms of the question of gradually and suddenly, I feel like so long as people are having to ask the question of like, when does everybody rush in? It's like when everyone is, it will be obvious to everyone, and the question won't need to be asked. And that the real tipping point will be that critical mass of people where it becomes obvious to everybody else that Bitcoin is the consensus of money, and that they actually need that it becomes hey, this is the only currency that's working in storing value, and it's becoming a more obvious day to day that the other currencies are losing value. And I don't mean having that inherent knowledge that the dollar is engineered to lose value, but that when you're going to the grocery store, prices are changing more frequently, and the dollar price of goods is rising, and your bank account is not going up with it. And that the true rapid monetization of Bitcoin, when everybody essentially when everyone else that hasn't adopted it is decides to, is when a fiat currency of a G3, G5 currency hyperinflates. When the euro, yen, yuan, or dollar hyperinflates. When a developed country's currency goes, that, in my view, is the tipping point for Bitcoin being obvious.
Interesting. So this brings up, before we transition to another segment here, an invisible crash. Are you so, like, when I started 15 years ago, when I was leaving Michigan State, I got into Robert Kiyosaki, Mike Maloney, gold and silver, and all this, reading Creature from Jekyll Island, and it was a lot of, in the gold, bug world, it was a lot of it just invisible crash and in measuring everything against gold. And you can obviously do the same thing with Bitcoin. And obviously the price in Bitcoin 21, .com, people can go to that. You can see, and there's other sites now too, where you can go see everything's crashing against Bitcoin. And is that, I would just love your thoughts on, and just unpacking this for a minute. Like this, everyone talks like there's going to be a crash, there's going to be this, there's going to be that. And you see it all over the place. You see it in Bitcoin, you see it in the macro world, you see it everywhere. I mean, God love Robert Kiyosaki, one of my favorite people of all time. And he's been calling it for the last 15 years. I mean, but truly, I mean, we did have a crash, and it should have kept crashing. Probably a dead cat bounced in 2012, and they just keep papering over it. But the insidious part is, and what I think woke me up was like, no, we're just in that invisible crash that I was reading about for so long. Is that not what we're in? Like, is Bitcoin the thing that's actually showing everyone the barometer of like, hey, you're actually in a massive crash right now, and Bitcoin is just the only thing exposing it?
I think that it's it's similar, like that. There's, I don't know what book it is. It's either When Money Dies, but there's like the Weimar Germany comparison of like stocks are getting, like the dollar price of stocks is going up, the stock market's going up, and people at first think they're becoming wealthier.
Yeah.
But they're not. It's just, paper gains or digital gains these days. And that that when the quote stock market's going up, their dollars are becoming worth less. And so I do think it's not like the idea that it's crashing up. It's that that the real signal is everyone's cost of living going up. The cost of real goods and services inflating, and people's bank accounts not tracking that. And so um, I do think that the currency collapse is the currency purchasing less and less, not just in financial assets, but in things that people are consuming every day, or things like real estate, right? Like one of the ways that I think about it is the price of real estate in Austin, Texas is insane.
Yeah.
But maybe the dollar price of real estate is correct, and
Mm-hmm.
that they're only going to print more dollars, such that if there's a valuable house, that house is actually there to be consumed, and that Bitcoin does become the barometer because it's the thing that's not changing, and it also delivers to the market a good that's differentiated from all other goods. If every other good is ultimately intended to be consumed, whether it's food at the grocery store, gas at the gas station, or the home that you live in, that every stock or bond is a financial asset that has a claim to some either taxes in the context of government or some cash flow stream. And as everyone figures out that Bitcoin's the cash flow stream, that it becomes the arbiter of value. And so um, the true crash will be when people cannot acquire real goods and services. The thing prior to that crash was the value of financial assets going up and people not realizing that they're in the crash. And that's the phase that I believe that we're in now. There ultimately will be a crash, and there will be a period of less economic stability when the quality of life overall degrades, because the things that people took for granted are not as easily ascertained or available to them. But Bitcoin will be the reboot that keeps the engine of trade going, such that we then get back to the standard of living that everyone previously took for granted.
Yeah, I remember like 5 years ago, Raul Paul, which I know a lot of Bitcoiners had at odds with Raul. I was talking to Dr. Jeff about him the other day, and aside from his crypto scamming and pumping a bunch of nonsense, he does do a lot of good macro stuff. So you can't always throw the baby out with the bathwater. But one of his charts to me, like it was the exponential age report he had, and as to what you're alluding to, it was mind blowing seeing like the G4 central banks, they're all the printing they've done since '09, and it was just flat for real estate against the S&P, everything. It was just completely flat. And Bitcoin is the only thing that had outperformed that of any substantial means at all. So basically, to your point, all of the printing was just basically just going sideways. It was just the prices were going up nominally in fiat, obviously, and everyone's like, "Oh, look, I'm getting," and in reality, you were just keeping up with the currency printing. That's all it was. So I love that you said that, because that was one of the mind blowing things to me. Really, a year or two into my journey, that was 2020. Yeah, so I was 2017, 2018 when I got in. But that was one of those things in 2020, seeing that report. It was just, I'll never forget that. It was just like, holy cow! Like what you thought was kind of happening was actually happening. It was mind blowing.
Yeah, I agree.
Oh, what what do you think I would love for you to get some of your thoughts on just inflation versus deflation. I get a lot of people that talk to me about like they think inflation is part of capitalism, and I'm always trying to explain to people that the money is the bedrock of the economic system that you use. It's not inherently part of capitalism. And you're always something that does come to my mind when it comes to things like this. And you're such a good speaker on these topics. But I'd love for you to just give your thoughts, unpack a little bit of why deflation is so important. We touched on this a little bit earlier about the two systems, but I get a lot of people, again, whether it's in the comments on YouTube or it's people I'm talking to, and they think inflation is just inherently part of capitalism. Like, well, yeah, like my wage is going up, and like we said, these prices of my home's going up, but like my wage is going up, and then my assets are going up, and maybe more to that. The whole point is, what are the impacts of this? And you briefly touched on it earlier, and that's why I made note of. I wanted you to just speak on it a little bit more. Like, what are the impacts of society that we live in, where we have inflation everywhere and just trickling throughout society, instead of this world we could have where we're all seeing the gains of the technology spread across society, whether it's rich, poor, middle class. So I'd love for you to just unpack this a little bit, and how Bitcoin really engenders this and is able to kind of extrapolate these gains throughout society?
Well, the way I would think about, first, I would agree with the idea that that inflation is not inherent to capitalism, and that in our modern economy, the principal source of inflation is money printing. That as the Fed or any central bank prints money, the process of printing money and the existence of more money definitionally does not create more goods and services. That there is suddenly more money floating around the economy to compete for a relatively fixed sum of productive assets and people, productive labor. And so as more money exists competing for the same resources, the cost of goods increase. Bitcoin, in contrast, is not inherently deflationary. It is a fixed supply. It is neutral. And the way that I would articulate it for anybody is that if you are holding a form of money.
If you're liking this interview, but you're just wondering, you know what, Brandon, this is amazing stuff. And I get you have these guests on and they're talking about how orange pilling the world is so great and how Bitcoin is going to take over the world. How in the world do I educate my family and friends? How do I get people to understand what most people just don't care about, quite honestly? Bitcoin trading cards is the way to do that. When you open up these cards, you see the foil cards, you see the chase, you see the glossy cards, young, old, boy, girl, man, woman, it doesn't matter. People love these cards. It's awesome because they're super valuable, by the way. Amazing little side note. However, it Trojan horses them into the most important thing of the day. It's not politics. It's not all the things that we fight about. It's changing the money, fix the world. Bitcoin trading cards is the best way that we have going in order to do that, no matter who you are. You're gonna love them. Playable Characters 10 for 10% off at checkout. Playable Characters 10 off at checkout. btc-tc.com. You're going to absolutely love these things. Now back to the show.
And it is purchasing less for you over time. That is the money failing to be effective or efficient at coordinating trade. That is essentially your money working against you. In a world with a neutral and fixed money supply like Bitcoin, the only way in the long term or from a fundamental economic perspective for that money to increase in purchasing power in terms of real goods and services is if it's more effective at coordinating trade. And so one of the visualizations I try to articulate for people is, imagine there's a fixed amount of money in the economy. The only way that the money increases in purchasing power is if there are more goods or services available relative to the fixed amount of money, to that fixed 21 million supply. But the only way that scenario exists is if the money is coordinating trade to actually build goods and deliver services, such that there are more of them relative to the fixed amount of money. And that is your money working for you. You've saved in a form of money. The money is being spent and used to coordinate trade to create more things. And that deflation can't inherently be bad, because if someone is willing to part with a good or service for less money, that is them voluntarily accepting to do that. Why would they do that? To then acquire your form of money that can't be printed, that is expected to increase in purchasing power, but will only increase in purchasing power if more goods and services are available to them, which means the form of money being used to coordinate and deliver more goods and services to the market. And so I think if somebody just thinks about this dilemma, not from a macro scale, but from a micro scale, and they think about 100 people in an economy, it's that no one is advantaged or disadvantaged by there being a fixed money supply. It just means that there's not one of them that can artificially inflate the supply, and that they all have needs and wants that will be fulfilled by some function. And what enables that most efficiently? The form of money that's neutral, that simply has the fixed supply. And so if you're thinking about it from the perspective of me individually, if I hold the form of money that can't be printed and it increases in purchasing power, was that good for me? Yes. Well, was it good for the next person? Yes. And the next person? Yes. And the next person. then go through the opposite. If I hold a form of money that purchases less over time, was that good for me? No. Was it good for the next person? No. It was likely good for a short period of time for the person that was able to print the money. And so it's like, even in a world where Bitcoin has a fixed supply, there's a scenario where over a period of time, it loses purchasing power because maybe people speculated too much, and then there was an economic boom or bust. Now, a form of money that can't be printed should lessen the volatility of the underlying economic system, but that's all thinking about macro, and if every individual just thinks about themselves and their own economic incentive, if they were delivering a good or service, you need money to make money. The saying goes. What that really means is if you're a business owner and you're saving in a form of money, either you're using that money to pay employees, to build capital, to say build a manufacturing plant, to ideally deliver a good or service to market and be paid for it more than you actually put in. And so it gets easy to be lost in that macro equation, but your incentives are functionally the same as every other actor in the economic system, and every economic actor would benefit if their money preserved purchasing power. And that's actually the evidence of people being willing to part with their time, goods, and services for less and less money, for the one reason that it's more effective at coordinating trade and delivering goods and services to the market without needing an inflation in the money supply.
We talked about, the hook of getting people to understand these things, and closing your bank account, and just the psychological aspect of some of these things, and there's all these memes. Bitcoin is very meme based, a social layer. Closing your bank account can make you wealthy. Closing your bank account can retire you 10 years earlier, type of thing. Mentally, how has, like, day one, if someone is not in Bitcoin, how can stacking sats and just a dollar cost average daily or weekly, that's not going to make someone financially wealthy, but how has it changed you mentally? For me, I think that's the biggest thing, is that getting over that hurdle and then starting to see that. How has Bitcoin changed you, even from day one into your journey now? How has it changed you?
Well, first and foremost, by saving in a form of money that can't be printed, you're ultimately able to shift from looking at the world of working to pay bills, to basically stay on a hamster wheel, to a different world where you can work because you want to work and you can focus on delivering value. If your money is constantly being debased, you're ironically constantly having to think about money and constantly having to make more just to stay in the same place. As you save in the form of money that can't be debased from underneath you, the value that you've delivered in the past holds value into the future, and you're in a functionally better position to be able to get off the hamster wheel and only work because you want to work. And when you do that, you'll actually focus on delivering value rather than making money. And those are two very different things. The other thing that I think about is, people that are later in their life that, might be sitting on a certain stock portfolio or bond portfolio and amount of money, but they're seeing inflation happen and they're wondering, I thought I had enough, but I don't know if I have enough now because things are getting more expensive. That the other side of it is, even if you're not actively working or at the part of your life where you're really focused on producing, but you're really trying to preserve, that the best way to preserve that is to be able to save in a form of money that can't be printed, that stores its purchasing power. And so I think regardless of where you're at in your economic lifestyle, or your age, your risk-taking portfolio, that Bitcoin is the least uncertain asset because it has the property that it can't be printed, and everybody will ultimately need that. And so it'll allow you to just get to the things in your life that matter, because you're not having to focus on making more of the money that keeps being printed. And that is the greatest unlock.
This debate going on about bits, sats again, we're coming back again. Bitcoiners love this. Bitcoin, bits, sats, all this stuff. Do you think it's smart to be talking to people about, like, again, we see it a lot in the marketing side of things, the social media side, 0.1 Bitcoin, 0.001 Bitcoin, 1 Bitcoin, before it was HODL 6.15 Bitcoin. I mean, there's a reality, a truth to it, obviously, where the more fiat price, the more it goes away from just the average person trying to garner a substantial amount. In saying that, there's 250,000 sats for every human on Earth. So what are your thoughts on just how we're framing things and maybe the best way to approach that moving forward?
So I think that 21 million is Bitcoin's shelling point, and that there's a fixed supply of 21 million. People typically look at that and think, well, there's 350 million people in the United States, so 21 divided by 350, or there's 8 billion people in the world. And it's a strong anchor point because it's a number that's relatable. The hardest thing to understand Bitcoin, or understand about Bitcoin, is not 21 million or whether something's called a bit or a sat. It's what is the fundamental reason for owning this? Is it really a fixed and finite amount of money? Is that credible? Because if somebody comes to the conclusion that it is, that's the basis of it becoming intuitive, and then owning some fraction of it becomes less relevant if you have formed a framework to understand why the total amount can't increase. But having some conception of how much there is in total, 21 million, anchored to some population set, is a very strong and realistic anchor of how someone might think about it. And so I think that really is the signal to focus on, and everything else is far less relevant. And so I don't think, in my experience, it's, soon as someone understands that it's designed to be a form of money that can't be printed, that there's a lot that goes into it, that it is credible, what we call the smaller unit, or owning some small fraction of it, doesn't become nearly as important. And one of my friends, made the comment to me, which I thought was extremely prescient, where he said, the thing I find most interesting about Bitcoin is that even the last person in the world that adopts Bitcoin, it will store purchasing power for them, just as it does for anyone that went before them. And the reason for that is that the money simply can't be printed.
Yeah, it's beautifully said. I think that's such an important point. Like, even the last person benefits. Even if they're not in, they benefit. They will from just a better society that's going on around them. So I want to talk about price. We talked about the money being 1/2 of every transaction. We talked about the 400 trillion. We talked about that a little bit, and that's more the macro zoomed out. I would love your thoughts on just maybe more of the micro, like this cycle, like the next 6 to 12 months. Everyone's expecting big things to happen here. Even this cycle, do you think there's what are your thoughts on the 4-year cycle? Is there going to be a super cycle? Like, how do you see this epoch playing out these next few years and where we're headed?
I think that ultimately, I believe that cycles in Bitcoin are driven by the supply shock that happens at the halving, and human psychology, that people have friends groups, social circles, information distributes, and that FOMO is real. But everything else that's dynamic in the world is also real. The fact that the Fed has rates elevated, that something unpredictable is going to happen tomorrow. At some point, unpredictably, the Fed is going to begin, predictably in terms of some point in the future, but unpredictable in terms of when, is going to start printing money, and that's going to help people connect to Bitcoin. So I think that from my own vantage point, we are still in the early innings of a Bitcoin adoption wave, and that despite a lot of otherwise what I would describe as headwinds, Bitcoin has stabilized above 100,000, and more people are figuring out, and more impediments to people understanding Bitcoin are being eliminated. More regulatory clarity is being created, and ultimately I think that's good for Bitcoin. So I don't know if we're in a super cycle, but it does feel like it's a coiled spring. At that same time, I'm always conscious of the fact that Bitcoin is volatile, and the Fed has been starving the entire world of dollars, and that everyone has to be cognizant of the fact that between now and Bitcoin being multiples higher from now, there could be a liquidity crisis, much like there was in 2020. I save all my Bitcoin or all my money in Bitcoin because I'm able to tolerate that volatility, but it's because I have a very strong framework and a lot of savings, relative to what I need day to day. And so, it feels like we're still in the early phase of an adoption wave. I personally, am always cognizant of, prior to the Fed printing money, there's a good chance that there's a dollar liquidity crisis. I expect the volatility to be far less this time than, in 2020, because there has been a lot of selling pressure over the last 3 years since the Fed began raising rates, and that Bitcoin has shifted from weaker hands to stronger hands through that process.
Do you think that, I see a lot of people, just, hey, it's 250 to 750, 250, 450, Samsung's obviously like, it's going to make a candle. We're going to have it and it's going to go to $1 million. What are your thoughts on the cycle? Or do you have thoughts on where price might be?
Yeah, I stay away from predicting dollar prices. I think that,
smart man.
yeah, it's just too hard to pick a number. I would expect by the end of the cycle that multiples more people have figured out Bitcoin, but each individual person figuring out why Bitcoin stores value at all is critical, is the input, and so that's really where I focus my time and energy.
I want to have you debunk once and for all this utility thing that I constantly hear with altcoins. We get hundreds of comments on every single YouTube video, podcast we do, etc. And most of them are good. Most of them are great comments, but we'll get 10% of the comments or whatever it'll be will be, Bitcoin's nothing. It's, there's no utility to it, etc., etc. One, why 16 years in, I mean, not 16 years of altcoins necessarily, but we're 16 years in. How are we still dealing with this? It's a little bit of a broad question, but also more importantly, what is this utility thing that people are so wrapped around? Because it affects the average person just trying to learn about this stuff and learn about sound money, and they're just hearing utility and this and that. Could you explain this for a couple minutes and give us the why Bitcoin is different, and just explain utility and why people keep bringing this up?
Well, first I would just make the statement that is true that Bitcoin's been copied likely no fewer times than 50,000 by any variety of cryptocurrency, and Bitcoin has 2/3 of all the value in the crypto world, and all of the other 50,000 copies and variants equals 1/3. And so there's signal there. Now, to the question of utility, the utility of money is storing value between a series of exchanges. I produce a good, maybe even if I convert it into a fiat dollar, get paid in a fiat dollar, and then convert that fiat dollar to Bitcoin. There was an exchange of value. You hold money and then you exchange value in the future. So money is storing value between a series of exchanges. That's its utility. There's also, in my view, a fundamental economic fact that money converges to one, that we only need one form of money. And the reason for that is that money solves the problem of trade, and that trade is an intersubjective problem. I must have the form of money that you're willing to accept, and you must accept the form of money that I have. Part of our evaluation of money, it's on an objective set of characters. The most important one is its supply. Bitcoin has the most important property of money, being that it's a form of money that can't be printed. And if money does converge to one, because we all need to form a consensus in order to trade with each other, and the most important property be that it is hard to produce, both of those two things are the anchor to everything guiding the fundamentals around Bitcoin. And that's not easy for people to sift through the noise. So it's just, again, pairing some level of primary education with, getting down to the first principles of what money is, why it's important, that utility in storing value and effectuating value transfers and trade, and that it's not a coincidence that everyone in your local economy is typically trading in one currency and not 50,000, and that it all comes back down to, if you could just save in a form of money that can't be printed, you don't need cryptocurrency 2 through 50,000. And none of them will ever be able to have a greater utility than Bitcoin because it already has a credibly fixed supply, and as more people opt into it, that credibility only grows stronger and stronger.
Beautiful stuff. And that's why education, we talked about it so much. We got Bitcoin trading cards, Parker's book, Gradually Then Suddenly. What better ways to educate yourself, educate your children, loved ones. Last thoughts on anything we've talked about, or anything at all, Parker, and also what books are you reading right now? What are you working on?
So, one, I would just tell people, one, if you don't understand Bitcoin, like, definitely pick up a book. My book, Gradually Then Suddenly, is on Safe Dean's website. I'd definitely recommend The Bitcoin Standard as one. The next book that's on my radar to read is Nick Bhatia's new book, The Bitcoin Age. I haven't read it yet, so I can't recommend it, but everything that Nick does is great, so I can recommend it from that standpoint. And then I would say, if you're somebody that's already come to understand why Bitcoin is money and why it stores value, I'd encourage you to, if you run a business or are an important an influential person in a business, to think about accepting Bitcoin as payment, that it's the next logical decision after you figured out why Bitcoin will store value. And that's what we're working on at Zaprite. So we're here to help those people. We don't generally encourage people that haven't figured out the first part to rush into accepting Bitcoin payments, that there's a logical order. But if you are one of those people, it's, to be high agency and to build the future that you want to see.
Incredible stuff. Mr. Parker Lewis, thank you for being a playable character in a sea of non-playable characters. Thank you, sir.
Appreciate you having me on.
If you can't get enough of these interviews and you want to deepen your education on sound money, wealth building, and freedom, you're not going to want to miss this playlist here. Happy binging. Check it out now. We'll see you inside.